It's almost 2 o'clock, guys. I'm just going to go through some statistics about what's going on in the Austin market. I still cannot figure out how to present and have my beautiful face on Facebook Live at the same time. So we're going old school. I got it up on I'm going to navigate this as best I can with this TV and some slides, because there's some really important information I want to tell you about what's going on in the Austin real estate market that maybe I've heard about, but we're not really paying attention to it. So one of the things we hear a lot, we get a lot of incoming leads, a lot of people relocating to Austin, people looking to move up, downsize, all that. And so that means we talk to a lot of buyers. We have a lot of listings out there. So our phone's ringing and the email inquiries are coming in all the time. And what we hear are people like, I just want to wait. I'm trying to time the market and all that. And so it got me thinking, well, what exactly does trying to time the market mean? Well, let's talk a little bit about that. And I think that you're going to see here that some buyers are starting to figure that out. I know if you're in real estate right now, it's been a weird year. I was talking to a buddy of mine just a few minutes ago. I mean, it feels like it's kind of a back alley fight sometimes just to get deals done and get buyers and sellers to agree on terms, and sometimes the listing agent, the buyer agent, to work together peacefully, which hopefully will change soon. But it's been a struggle. But as a result of that, like, you get to figure out like what's really important to people and then what it takes to put deals together, and both sides have to win. But let's take a look at what's happening. Little tangent there. Sorry. Just this year. All right. So this is us. You are here. You're probably familiar with that icon by now. What I thought was really interesting, there's still maybe a few more sales come through, and this is just for houses and townhomes and condos in the Austin area in the MLS system. But what we're seeing here is that we've had our worst year in 10 years for number of units sold. In particular, worst third quarter we've had in almost 11 or 12 years, I think, in the Austin area for number of units sold. However, before I move on to however, I want you to take a look at the second part here. So if we were to annualize it based on the percentage of homes that actually sell in each quarter, and did you know that actually more homes in Austin close in the second half of the year than in the first half of the year? It's interesting. It's not by much, but it is more. But if you were to annualize it, it would end up about right here where that black dot is, which would be another year of decline. 1, 2, 3 years of decline and a fourth year of just marginal increase since 2021. That the real estate market's gone down. So the reason I'm bringing this up, because that generally means it's about 3.5 years, 4 years for some people of price reductions. Some markets within the Austin area are down over 30%, 30, 35, 40% in some areas. That's a crazy amount of money. And I'll have some information on that here in about a month or so once some numbers come out about what that means as far as predicting what's next. But I think you'll get a pretty good idea here in a minute. But it's interesting if you look at, patterns, right? In history shows us patterns. History, it rhymes, right? It's not always the same. It doesn't always repeat itself, but it rhymes often, right? You've heard that. So you see a dip there and you see a dip there, and you can surmise probably that we're probably at or near the bottom of this correction. So if you're talking about timing, there's a pretty good time to time it right now when sellers are willing to deal, when there's 3 or 4 years of price reductions, and there's a lot of inventory. Speaking of inventory, check this out. All right. We have record inventory. And right now, what we're seeing is homes are either selling, they're pulling it off the market to reimagine the homes, which is painting and cleaning, or just giving it a break because it didn't sell the first time, and they're getting things ready. But you can see here we are again, right? If you line that up with the last couple of years, and by the way, previous to 2023, which was 22, 21, and 20, through COVID, inventory was like way down here. Okay. So it's just gradually, it's not even gradually, it's almost exponentially increased every year since then. And we're still going through that right now. All right. So you're looking, as if you're a buyer, you're looking at, okay, well, we've got lots of inventory. We've got sellers that have been on and off the market for 2 or 3 years. They're trying to they're coming to terms with the new market. They want to move on with their life eventually. Right. And so there's some deals to be made. And I think what's probably one of the more interesting parts of this is, this graph right here. So we all know a couple of weeks ago, the Fed announced that they're lowering their rates, and then in the future, there's some more rates coming. Well, that's not directly tied to the mortgage interest rates that we talk about all the time. They're pretty connected. Okay. It's not direct effect, but it's pretty direct. All right. And so, and it affects a thing called the 10-year treasury bill, which is where the government funds everything. we're starting to see, so those rates came down a little bit and then they went back up, oddly, but I'll show you that in a second. But then we started to see a big surge in the number of contracts. This is the number of buyers agreeing with the seller and seller agreeing with the buyer on putting a home under contract. So just remember, like the third quarter was record terrible. Like we haven't seen anything that bad in 10 years, the third quarter, the quarter we just got out of. Okay. But now we're starting to see literally people buying the news, right? They're getting into agreement with sellers. And so we might see a surge in the fourth quarter for a number of homes sold. It's too soon to tell, but I can tell you from the activities in our office and from some of the other agents that I'm talking to that things are starting to pick up a little bit. I think that there's still going to be some problem areas in Austin for a long time. We have built into prairies on the perimeter of the Austin area for a long time. And there's a lot of inventory out there, right? But the more interior of Austin, the more established neighborhoods, the more easier access, more strategic places to live. Like we're starting to see some of those areas kick off. A couple of multiple offers, by the way. So what's interesting is now we get to go into fourth quarter and we get to track what's going on with buyers, which is good news. Some supporting evidence that makes me think that this has some legs to it. Like we might get to see some increase in fourth quarter, maybe more than we've seen in years past, is this. Okay. Mortgage applications. This is where it all starts. When hardworking Americans with jobs apply for a loan to apply for a mortgage so they can buy a house. For years, there was a downward trend in that. Okay. Now this is not official. These are literally my arrows that I drew in on Canva, but you can see it kind of makes sense just in the last 7 or 8 months. Well, since the beginning of the year, we're starting to see an increase in applications, mortgage applications. That's good news. That's good news for the real estate market. It's good news, I think, for everybody, that this is going on, especially while interest rates are hovering still in that 6% range. Some of the people that I follow and the people that I talk to seem to think that the 5.5% to 6.5% mortgage rate for 30-year fixed is probably here to stay for a year or two, maybe longer. We'll see. We'll see, right? Nobody knows. Maybe a person knows, but not the rest of us. They're not telling the rest of us. So we had a downward trend and we've been seeing a very gradual upward trend of mortgage applications, which means that buyers are thinking about and they want to enter the market or they're getting strategic about their next move, which is coming. Okay. That's good news. And then if you just take a short look at this, I compressed it just down to the last just a few months here because I wanted to zero in on this part right here. I don't know if you can see that super closely. Drop charts in the remarks and I'll send you unbranded charts so you can take a look at these if you're a real estate agent. If you don't care about that, just let me know. I'll send you the ones with the brand on them. Somebody's at my door and I don't know what to do about that. So you guys get to see who's at my front door. Right after the Fed made the announcement, mortgage applications skyrocketed. I mean, like that's probably a 25% increase. But then right after, when the mortgage rates dropped or went up again, right after the news, the applications went right back down. So I'm anxious to see what that looks like next for what's coming next, to see if we have legs right now, right? Talking about this again. So this is good information. I think if you're an agent and you're working with a lot of buyers, you show them this information, you say, listen, this is what's going on and this is what we're trending towards. And we all know that buyer activity, if you're really, I think if you're a buyer and you're smart about it, you go in it in this second season when sellers are more willing to deal. There's less buyers in the same market that you're in, and you usually get general more favorable terms. Realtor.com just put out an article every year. It's this like second, third week of October that is historically the best time to get the best deal on a house every year. Okay. And if you enter the market here, right, when all the other buyers and sellers are thinking about it at the same time, it's harder to get a deal, right? You enter into a market that's in a steep incline of contracts. That means there's a lot of buyers out there making offers, and there's more of a chance of you getting in a multiple offer situation and having to pay more money. Okay. So just think about that. And if you're a seller and you're talking to a seller, then this really works in your way in two ways. It works in your favor two ways, because their buyers are very active right now and there's not a lot of homes on the market to compete with, right? We saw that homes are coming off the market. So if you need to sell and you can move to Florida, or you're trying to get on with your life and you want to beat the rush of everybody in your neighborhood putting their home on the market in the spring, which is exactly what happens, right? Then this is a great time to sell. Or you can risk it and see if, this trend continues for buyers entering the market. So if anything, it gives you information. And these are the numbers that come from the Austin MLS. They come from the Mortgage Bankers Association. They come from the Texas A&M Real Estate Research Center. It's great information. And what's important, I think, about this for real estate agents is the more that you're the one explaining this to your clients, the more you're in control of the narrative and the more you can help your clients. If you're letting Yahoo or Wall Street Journal or whatever be control of the narrative and tell your clients the news, you're going to lose, right? Your clients are going to lose. You're going to lose because real estate is very specific to the city and even the neighborhood that it's in. So you learn how to have these conversations with your clients. You're great. All right. I hope this was helpful. If you want the information, just say the word in the comments and we'll go from there. Peace out.